How good was Fubo's earnings of Q1 of 2021? Well, let's dive in. What's up, guys? Welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. So Fubo today released their earnings report, and after hours were crazy. It had a price jump of 22% from $17.67 to $21.64. It started off at a low of around $16, low of $16 and high of $15. And this was mainly due to the whole Nasdaq being down around 2.5 to 3% pre-market. And luckily, the Nasdaq recovered, and so did Fubo. And ended the day around up 8%. But that being said, $21.64 is still fairly low compared to what its high was around February and January. It was around $48.46, and even after their Q4 earnings report of 2020 around March 11th, they still had a stock price of around $33. Even with the price increase and the correction, Fubo, with the stock price being lower than $33, it seems like it's just being corrected to a more reasonable amount. It was being oversold, and I want to take a closer look to see if the earnings report were actually that good or it was just some type of correction. Well, let's take a look. Before I look at the Q1 earnings report of 2021, I wanted to take a closer look at Q4 of 2020 so we have a better feel in terms of comparison. So the total subscription revenue for Q4 was $91 million and advertisements were $13 million. The total revenue was around $105 million. That being said, their subscriber-related expense was around $89 million, broadcasting transmission around $10 million. That adds up to pretty much their cost of goods sold. That being said, this is a pretty low margin in terms of the fact that it's doing lower than around 10% margin. Doing some quick math here. And Netflix, Roku, and other streaming services are ranging around 40 to 30% margin. Fubo, even though they have new services like betting, they're still rocking a pretty low margin, and that's pretty scary. And if we look at this quarter, the total revenue from subscription was around $107 million. The total revenue from advertisements around $12 million for Q1 of 2021. This leads to a total revenue of $119 million. That being said, the subscription for growth in terms of revenue, it's pretty good. It's around a 17% increase in subscription revenue growth. The overall growth for revenue in general is around close to 12-13%, which is a good growth amount for a streaming service company. What I didn't like seeing in this earnings report is the total number of subscriber-related expense. This is around $113 million versus $89 million. This number jumped from 84% to close to 93-94%. Now this shows that their bottom line, their gross profits, are becoming smaller and smaller. Even with the growth of revenues, they're not reaching economies of scale unless they're able to cut down subscriber-related expenses and grow their advertisement to cut down this loss. It's hard to see Fubo becoming profitable unless other ventures will help them reach profitability, like their sports betting app. That being said, this is not a good trend line for a streaming service company to have in terms of they're paying too much to retain each subscriber. They're paying more money for subscriber expenses than they're actually making. With a company reaching this scale, it shouldn't show that. And that being said, Fubo is showing good growth in all aspects. The advertising average revenue per user increased 57% from Q1 of 2020. They're increasing the revenue year over year, which is a good sign. Their total amount of advertising revenue increased to 206%. They had 48,000 new subscribers compared to the previous quarter. And the total average revenue per user increased by 28% from $54.16 to $69.09. And like I mentioned in here, the expenses as a percentage of revenue, although it decreased from Q1 of 2020, it increased from Q4 of 2020. That being said, I'll give them the benefit of the doubt that usually Q1 is not a great time for sports. Football season ended, baseball season ended, a lot of these sports that work with Fubo aren't in season, and that might be the reason that their subscriber related expense is higher compared to Q4 numbers. But if we compared year over year numbers, they're doing pretty well. But that being said, Fubo barely had any revenue in Q1 of 2020. They were still in the growth phase, and it's hard to make that type of judgment with that huge amount of growth that Fubo witnessed. So the safest bet, in our opinion, is to compare to Q4 numbers. The net loss for Fubo in Q1 2020 increased, but according to them, the net loss percentage decreased, and adjusted EBITDA percentage decrease also. So they're slowly becoming more profitable. That being said, it's still a huge number in terms of loss and in terms of adjusted EBITDA. What we liked seeing was their guidance. They're expecting to grow their quarterly revenue. They're expecting to grow their full year revenue, and they continue to expect to grow their subscribers from quarterly subscribers from 286,000 in Q2 of 2020 to 603,000. They're expected to increase their subscribers to around 13,000 by next quarter, which is a good sign. To be honest, they probably might do better as more sports are coming back into season. Baseball is back into season. Football is going to be closer back into the season. And this is a good sign for Fubo because this is where the bread and butter is. On top of that, they had a deal with the World Cup that they're going to stream them, and with their new betting ad coming along, they're going to be able to create some synergies and gain more revenue that would boost up their bottom line. But that being said, overall, I don't think that people saw that Fubo's earnings were that great, but Fubo was way undersold as of this past few months. It should not be rocking around a 2.4 billion market cap as other streaming services are valued at a higher price. And with Fubo's great growth potentials, even if you're able to overlook the low gross margin level, Fubo will be able to find a way to cut costs. So what do you think? Do you think Fubo is just having a correction in stock price, or do you think the earnings report were actually signs that Fubo are doing amazing? Let us know in the comments below. So that's it for this video. If you liked our content, please give us a thumbs up. We use this as feedback as to whether we're making content worth watching. Again, thank you very much for watching, and stay tuned for the next one.